Nina, it's great to have you with us this morning. Let's just start with a simple question. Do you trust the rally, especially in some of these high growth, unprofitable tech names that are still way off their peaks? Do you think they settle in or around these levels?
Well, thank you so much for having me. It's great to be back. And it's certainly been a rough year, as we know, for tech stocks. But I think if you take a step back and look at what is happening with a lot of these names, we're seeing a lot of great tailwinds in tech. And I can tell you the demand for technology, especially from what we see on the early stage side, is really promising at the moment.
So, Nina, I know that you've talked in the past a little bit about the IPO market, which has been extremely slow so far this year, but you think that there's actually reason to think that it could open up in the next little bit.
Yeah, well, I think it's important to just take a step back and see where we are today in the market, right? A third of tech companies that IPO'd since 2018 are actually trading below their last private round valuation. Companies like UiPath, Dropbox, and up until yesterday, Uber. So if you're a late stage private growth company right now, you basically have three options. One is wait it out on the sidelines and hope for the market to get better, extend your runway. Second is explore M&A, which we talked about back in January and we're starting to see a lot of today. And then the third is brave the market, go for it, because there are some very strategic decisions and reasons to IPO even in a market like this.
And what would some of those be, other than just the need for capital to fund general corporate purposes?
Right. So first, history shows us that winners take market share in downturns. We saw it with Amazon in 2001, Visa in 2008, and Atlassian in 2015. And those were not easy decisions to either go public in those markets or double down and be aggressive in those markets. And look at where those companies are today. So that's reason number one. I think if you believe that you're operating in a huge market, this could be time to build a war chest, be aggressive, and even maybe acquire some companies in the short term. The second reason is if you're selling to very large enterprise customers, they kind of want to know you're going to be around 2 to 3 years from now, especially if they're spending tens of millions of dollars on your platform. And being public is a great stamp of approval. And then lastly, I know the narrative has shifted towards show me the money, path to profitability. But in reality, I do think investors still care about the balance between that and also growth. So if you're a private late stage company, you want to make sure to capitalize on as many years of high growth above 30% as you can as a public company. So I think actually on balance, some companies, not a lot, but a few, will look at this and say, look, it might be worth going out this year. Yes, it'll be bumpy in the short term, but I think there's reasons that strategically, when you look down the road 3 years from now, it could be a great decision. And if we sit here in December, we might be surprised by what companies decided to come out in this market.
Yeah, Nina, but if you're Stripe or Canva, Stripe, private valuation at about 100 billion, Canva at 40, why would you, right? Because payments and fintech have been hit so hard in this market. I mean, do you really think that Stripe would still have a $100 billion valuation in the public market like it has in the private market? And it hasn't had any trouble doing deals, making partnerships, and growing as a private company, raising more capital. Why go into the public market in this environment?
Well, that's the conversation that's happening real time. I can tell you in every boardroom of a lot of these very high priced late stage privates. And, just to be clear, I don't think all companies, that are in these areas or those companies that you mentioned will go public. What I'm saying is I think we'll be surprised because I think the assumption right now is who would want to go out in this market? Just too volatile. Multiples have come down. I think it'll be a very bumpy road. But when you actually look long term and try not to over optimize for today's market, I actually think there's a pretty good case for a select few companies to come out.